Hello, welcome to WINFXTRADING YouTube channel, the only channel that is optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting the channel, try to subscribe and turn on the bell notification so you get notified each time I upload a new content, and try to comment and share this channel to your friends and network so that YouTube will push us to a high level of audience, and that will encourage me to create more quality content in future for your successful financial freedom. Today's topic is Synthetic V's Market Dynamics Study for Successful Synthetic Market Trading. So what we shall be discussing here include market time delay theory. Price is a particle. It has force, velocity, momentum, and energy. It has wave property. It has randomly distributed patterns. So these are the things we shall be discussing. So I will start with market time delay theory. I will take you to the chart because everything I'm teaching have to be real and practical. So I'm going to use object to illustrate them, and then you will see why you are losing, and you see why you have not made it while trading. And this video will help you. But though a lot of people are tired of also watching video and they really like to depend on some professionals, okay? So don't worry about it. I have already solved the problem. My VIP signals is giving a lot of people financial freedom. All you have to do is to join my Telegram channel, then DM me on Telegram. I always drop my Telegram handle on my Telegram channel, the public Telegram channel. So when you shout me, I'm going to add you to the VIP Telegram channel. It is where I drop signals on boom and crash, Volatility 75 and other V's and jump indices, then Forex, gold and Nasdaq as signals are being dropped there. So what you need, right, is to make a very token of payment. It's very small payment. You make your payments and you join the VIP. Some people say it's costly, but for me it's not costly. Why? Because when you pay every month, you pay to some other services and you blow your account, you pay to some other, you go to another services, you pay, you blow your account, you go to another one, you go up to 5 and 10, you still blow your account. Why not pay some good amount of money that will actually give you what you want? It takes me a lot of stress and energy to produce my signal, but once I send it, your account will go by quadruple, 5 times, 6 times, 10 times, and all of that in a short while. That's good. Let's continue. So I'm going to take you to chart. I will start with market time delay theory. So let's go there. Okay, see. The time frame I'm going to use, I'm going to be, for all the illustration I'm going to make in this video, I will use H1 time frame because I'm going to use M15 time frame because in a day we have 24 hours. So then inside 24 hours, every hour has 15 minutes by 4. 15 minutes by 4, meaning that we have 15 minutes candle in a day. We have 15 minutes candle in a day equal to 4 by 24. Let me show you what I mean. Let me bring out calculator because I want to illustrate everything for you. We have in a day 24 hours, and every 1 hour has 15 minutes by 4. Like every 1 hour has 15 minutes up to 4, meaning that we have 96 candles in a day, in which each candle open and closes in 15 minutes. Are you getting? So with this 96 M15 candles in a day, we can analyze the structure, how this M15 candle arrange themselves. Because if you know how they will arrange themselves, you can easily predict where the price is going to be after some period of time. Let's say in 2 hours, 3 hours, or 4 hour time, or higher, like more other times higher, about like 12 hours, or even next day, next 3 days, even after, or next week, or in the week, you will know, you will be able to understand all this. Let me show you what I mean. Let's go back to that chart. I'm going to map out today. Let's see where today started. Let me use the coordinates. Be looking here. You have to be looking here. Today is 28th August. So today is 28th August. So 28th August we start by 12 midnight. With the 00. Okay, let's manage here. I'm going to use vertical to do that. Okay, we can be, it's somewhere here. Okay, and this is where it is currently. This is the current position of the price. Are you getting it? So when we talk about delay, let me increase the size of this thing to 4 pesos. When we talk about delay, I mean how price is able to stay within a particular range before it will break out into momentum. Before I continue, I'm going to go back and reread. I'm going to recap the main point we shall be discussing in this video. I say market time delay theory. Price is a particle. It has force, velocity, momentum, and the energy. It has wave property. It has randomly distributed pattern. Now, I want to summarize this. Now, when I say market time delay theory, this theory has to do with the ability of price to remain within a particular range, like to vary between two prices, to take on two price values and remain within that price for a longer period of time, at least from 1 hour and above, depending on when this type of ranging situation is going to occur, depending on where it occur and when it is going to occur. The length of the ranging, the length at which the price will remain within a fixed range, varies. But I'm not going to go deep into market time delay theory. Most of the things I teach, I'm just giving you the preamble. If you need the real course, if you need the main course, you have to enroll for the course and learn the full thing, and then you'll be able to become pro trader on your own. Now, so let's continue. Let me go. I have at least explained the meaning of market time and delay theory. The price is a particle. You see that horizontal line you are seeing that show you the price at any point in time is a line. Now, if you imagine the ends of that line shrink. If you imagine the both end of the line, like for instance, let's say this is the end A and this is end B. For instance, if these two two endpoints come together, let us assume we have also a central point here along the line. If the 2 points come and converge together at the middle, they become a single point. So see price as a particle, as a point. Are you getting it? Now, if you go back, I made mention of force, velocity, momentum, and energy. Yes, price has a force, and once something has a force, then velocity will just come up, momentum will come up, energy will come up. It has a force, and those forces come from the demand and supply imbalance. It comes from demand and supply, and this idea of demand and supply is actually dealing with the how buyers and sellers are distributed. If buyers are more than sellers, then the price is likely going to rise or go up. If sellers are more than buyers, the price is likely going to go low. So actually, what I'm trying to show, what I'm trying to explain here is that there is a force on a price as a particle. There is a force acting on a price whose direction is dependent on the nature of imbalance between supply and demand. This imbalance is a difference. If the difference between supply and demand is positive, the price will go up, meaning buyers are let me show you mathematically. So you can see this is the formula. This is demand and supply imbalance, total number of buyers minus total number of sellers. If the total number of buyers goes beyond certain level, certain value, take on certain value, and this value is actually determined by broker and market makers, the liquidity providers like banks and other financial institutions. Now, if the difference is equal to some of those limits they set, the price is going to go high. If the difference is equal to is less than, if it is negative, for instance, if the total buyers are minus total seller is negative, what it means is that the negative sign there means is that sellers are in control, and therefore the price is going to fall. So it is just the opposite direction of buyers. Take for instance, if we have if the imbalance, the demand and supply imbalance is about 1.4 million, the price will go up. But if it is minus 1.4 million, the price will go down. All these things, you don't need to do this calculation because you are not liquidity provider. You are not, even when they know the value of this imbalance, you can't know it. You can only predict, and that's why you need to learn. I'm not teaching how to predict where price is going yet. I'm just giving you the general knowledge of what you don't know. This is the general knowledge you have to know. These are knowledge that is more of knowledge based, and people don't have it, and it's affecting their trading because what you don't know will overpower you, or what you don't know can make you make mistakes because you don't know that those things also control your trading. Okay, now let's get on to it has a wave property. So price have a wave property. Let me show you, because I'm just trying to explain this thing one by one, then later I'll go to chat and do the whole practical. Let me show you a lot of things. What do I mean by the fact that price has a wave property? What is a wave, by the way? Okay, let me show you what I mean by wave. Okay, now you see the price left this point and reach here and do what? Come down. It meets the previous potential. It goes to the previous potential and go up and come down. Though it didn't reach the second potential point, it just stopped here and do what? Went up and then tried to come back again. Now, we can draw a symmetrical line that divide this. We can draw a line that divide this graph into two equal parts. We can just draw this one that goes like this. Then we can just fix it in a plane, in a vertical plane like this. Are you getting it? and then we'll also fit it in a horizontal plane, meeting at the origin. You can do like this. Now this graph is a wave. This is the horizontal this is the line of symmetry. Every wave motion has symmetry. This is the line of symmetry of the wave. This is the horizontal axis that model the direction in the horizontal that model the horizontal direction. This is the vertical axis that model the vertical direction of the wave. Now these are points along the graph. These are points. Those points are wave particles. They are just price particles. These are points. All these points are connected by this graph. Are you getting it? Now a wave has amplitude, that is maximum distance covered before it will change direction. A wave have it also have maximum point and minimum point, the crest and the trough. Here is crest, maximum point, and here the lower point is the like those turning points here. This is a turning point, so you can call it trough. Are you getting it? Now, so I'm just trying to show you that price movement is like a wave. If you went through physics, you already understand what wave is. So what it is that if a price leave a particular point or potential, it will try to come back to that potential after some time. But people don't know that, and that's why if you buy at this point, you are risking yourself, because price must definitely come here. So this is the right place to buy. And if this market is buying, like it is buying along this line and it's going up, are you seeing it? It's buying, it's going up, and you sell at this point, you are risking yourself, because it has to come near this potential before it will sell. Let me continue this again. This time around, I will just model a kind of price action. Let's say price goes up like this, come down, go up, come down, go up, come down. Now price is a particle. Just let me put a dot or one or two dots to show it's a particle. Now I'm going to mark the turning point with X. Now you will see that from one turning point to another turning point, you will form something that looks like zigzag or M patterns, multiple M patterns. You will also see other patterns like you see. That's why I say it has distributed patterns, but they are randomly distributed. These are just basic patterns. There are other types of patterns, but I will not go deep into them. I'm just trying to show you that this thing affects your trading. You need to have knowledge. Like, see, to be successful in trading, you need to have this knowledge of, like, some theories that have not been thought about. Nobody have talked about them, but these theories are indirectly affecting your trade because you don't know how to utilize them. Theory means a fact that has a proof. A fact that can be tested and then taken to be a law. Okay, meaning that there is an element of truth in it. Because what I'm telling you, most of them might be more than theory, like they can become a law that like a true law that is being respected by the market, and if you don't know it, you will always be losing. I get it. So this turning points are connected in such a way they form M, meaning that, in other words, if you look at normal wave in physics, it looks like this. How wave moves in to and fro method, like it goes up, goes down, goes up, goes down, goes up, goes down. This is a typical way market moves. But this structure, this one I draw here, being typical, it can vary. It can be in the horizontal, then it become a ranging market. It can be moving up, or creating higher highs. It become a uptrending market. It can be moving down, 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 creating lower lows. It becomes a downtrend. But in general, market behave like a wave. I seen it. It behaves like a wave because it has all the properties of wave. What is a wave? A wave is to and fro movement about some fixed points. A particle that move into and fro about some fixed point. What I mean, you people might not even be serious with this video, but because it seems to be a physics something. But what if markets, the way price behave in Forex or synthetic is being modeled by some physics ideologies? What if, and you have been blowing your account because you don't have those ideas? Remember, it is scientists that actually program the software that are being used in trading, and you actually need to know the secret behind those things. So a wave have a central point about which a particle is going to go to and come out from. Are you getting it? So a wave has a maximum displacement from a fixed point. So a central line or fixed line. So this, from here you can map and go up. So this distance, let me correct it. The distance from here to here is called amplitude. The distance from here to here is called amplitude. That the particle left the central line, go up and reach the maximum point, which I call the crest, and then change direction. And it change direction and come back to the central line and break it, because a wave have a negative cycle and a positive cycle. The upper cycles are positive and the lower cycles are negative. If at all you are trading, or if you at all you understand wave and you are trading the upper cycles and lower cycle, at the upper cycle you sell, at the lower cycle, like at the what I mean by at the maximum point you sell, at the minimum point you buy, then you will be successful. But the problem is, it's not easy to know the real maximum point and minimum point, because the maximum point is that point where the particle will change direction. Definitely it doesn't care, because okay, imagine that because you saw that something happened along this zone, then when this market is going up, it break the central line or fixed line and then came near here, then you would like to sell here, isn't it? But if you sell here, it will not work again because it has broken. It will just break here and go up here and gain saturation and then change direction. Are you getting? Now, how do we explain this? You can just explain this by the fact that the patterns are randomly distributed. Don't expect it to be similar. They are randomly distributed, meaning they can take different form. They can take different form. This, what I'm teaching here, is just, I'm not teaching strategy. I'm just teaching you general facts that some people don't know, and it is affecting their trading. Okay, you see, this is a sell signal and this profiting. What make it to profit? It's a simple wave theory, and you people will think I'm playing here. Let me show you what I mean. I just follow a simple wave theory. If you look at this market, it go like this, go up, go like this, go up. It's following the wave pattern in a systematic manner. Go up, then we expect it to go down. So that's why I sold here. I can't buy because I know that it has come down and then go up, so it must come back. That is, must go down again. Simple. Are you getting it? But don't expect a wave to be always like, don't expect that a pattern that is ongoing will always be respected. No, that's why it is not easy. I don't know how I will put this. You really need to buy the course or join VIP so that you will be able to gain some financial freedom before you gain courage to learn deep, because trading is not one day something. You don't learn how to trade in a day or in a month or in a year. It's a lifestyle. You keep learning until you become perfect. So what I'm trying to teach here is not that it's a strategy and you just start following the wave theory. After following the wave theory, you make it. It's not always like that. There are other things combined you should know. This is just a celebrity video teaching people what they don't even know before, and it might have been affecting them in their trading. Now let's continue and go to that the other stuff we talk about. It has randomly distributed patterns. Okay, that's what I just said it why I was illustrating it, price as a wave. If you check patterns, let's say within on 28th August, because you see these boundaries here, the model how the price move on 28th August. Now if you check the patterns, what I mean the patterns are the way the market move, like the M structures, the M patterns, the shape it creates while it is moving. You see it go up here, come down, go up, come down. That is M. Now it come here, it go up and then come down and go up. Which structure is this? This pattern is different from this pattern because this pattern is not M. But if you look here, it goes up, come down, goes up, come down. That is M, and the M was broken, so it is M. The other patterns we have V pattern. If you look here like this is a V pattern without considering the middle one. This is a V, but it's inverted V pattern. This is another inverted V pattern. This is U pattern. There are a lot of patterns that take some alphabetical letters. Are you getting it? So all these things, they do affect your trading. As a wise trader, when you see a momentum, because this market moves with momentum, there is a momentum in this part from here to here. You have to expect a reverse momentum. A reverse momentum. And if you calculate the velocity of the move, you will know that, because what will tell you that this market has a big momentum is the velocity, how lengthy the candle are, and the rate at which they cover like a big price, the rate at which the price react to some higher price or some very lower price. If it react at a faster rate, then the speed is high. If speed is high, if speed is high, which is the velocity, then the momentum is high and the energy is high. There is high energy in that market, and like the direction of the energy depends on the direction of the velocity, and the direction of velocity is just where the price is going. It is the velocity goes in the same direction with price. Are you getting it? So what pushes price is the forces of demand and supply. So if as this market is moving up like this, it was moving up in this direction, then we say that the force is going up. And what makes me to bring the notion of momentum here, you see how big the candles are. The green candles are very, very serious. There is not much delay. There is not much small candle creating. There is a big momentum in this market. Are you getting it? I'm not here to do some fiscal calculations and all of that, but I'm telling you the knowledge base you need to have, and it will give you confidence in your trading. Momentum in this part and this part is not the same thing with momentum from here to here and from here to here. Currently, the momentum currently now, you cannot compare it with momentum on the upside as the ones I illustrated just now here. You see, a lot of things is like a lot of things is getting varied. Things are, market is randomness, is full of randomness. So things are, the way you see it today is not the way it will be tomorrow. These are the things you need to know. Are you getting it? So I'll be ending this video. If you are still not making money, try to join VIP and enroll for my courses to get the full detail of trading as a millionaire or a billionaire trading trader. You know, you need a strong hand for you to become successful. I'll be ending this video. Thank you and bye for now.